Good afternoon, outliers. Just when you thought it was impossible for the market to actually go down, guess what it does? It actually goes down. Let's take a quick look at it real quick, right? Look at this huge engulfing candle. This is a warning shot to me. Now, it absolutely 100% could go right back up tomorrow, right? This is going to be the 6th time that it's actually, we could call it the 7th time. We could call it the 7th time that it's visited the 20 EMA. But keep this in mind. Look at this chart, right? When's the last time it closed below here, below the 20? January. So it's been on a 4-month run. Exactly today, 4 months. January 4th. Since the last time it closed below the 20. Now, it absolutely, like I said, could bounce right back up tomorrow. But this is the first big engulfing candle pushing it under the 20 and under the 10 that we've seen in a long time. Here's a great example. Big red engulfing candle. And then that started a downtrend after that point. So I'm going to be extremely defensive today and take everything off. And yeah, today is one of those disappointing and frustrating days, right? We've all seen it, and we are definitely experiencing it today. Yorn, good to see you. Leo, good to see you. Yeah, this is a big warning shot. Yeah, no joke, dude. Hey, Jean-Louis. Hey, Watch Channel. Hey, Sebastian. Sebastian, you made more money than me on Ori yesterday. Now, earlier in the day, as you can see right here, was quite the gap up. I mean, 80 basis point gap up nearly. That's a pretty sweet move. Same thing happened in all 3 of the stocks that I'm holding, right? Nice gap up, a little bit above the 1 ATR at some point there. Same point here. Same point here. We had some really strong moves this morning. But we also had, I think, 6 Fed governors come out speaking, talking about inflation, talking about rate cuts, stuff like that. And you can see how much of a difference 1 hour can make. Hey, Nathan. But you know what? This is part of the game. Don't be discouraged. Don't be frustrated. Just understand these things happen, right? For every incredible, like, you've never seen this much awesomeness, there's also going to be days like this where it's just like, oh, come on. So, like I say, I am going to get out of everything, go to cash, and wait and see what this market does. I mean, like I say, it could totally reverse back and continue on its way, but on a giant engulfing candle like this, that is a very, very, very bearish signal. And I'm going to get way out of the way. Leo says the planning exit RGF, Vert, and Ori earlier, and it's all gone. Dude, I know exactly what you mean. I was checking it out earlier today as well. It's what it is, my friend. Can't change that. So let's do this. Let's start at the top after we click our very professional bumper. All right, welcome to the Outlier Trading Room. This is how to trade in only 10 minutes a day and exactly how to take the guesswork out of trading. Now, full disclosure, I am an outlier. I'm a partner with Outlier. Not I'm an outlier with partner. I'm a partner with Outlier, and this is my style of trading using Outlier. But of course, Outlier delivers you new opportunities every single day. So typically we'd look at the trend here. 10 is over the 20, price is over the 50. When you see a giant move down like this, like I say, a big engulfing candle, an engulfing candle, let me draw on the chart real quick. An engulfing candle, and I don't trade a lot of candlesticks. It's not really my thing. There's 2 candlesticks that I look for. An engulfing candle like this, right? Let me change the color of that to blue. You can see how it's bigger than the body of this one right before it, right? So it's an engulfing candle first. And then, to add insult to injury to this candle, it's a giant gap up followed by a huge move down, right? A power move down, if you want to look at it, right? Hey, Donna, good to see you. A powerful move down. So yeah, to me, this says get out of the way. So let's go do that real quick before it gets even worse. All right, we're going to start at the top. I'm going to start with Ori. Oh, hang on. I didn't sign into Tastyworks real quick. Let's start at the top, work our way down. Pardon me while this loads in. Hey, Nathan. All right, load it in. I'm hoping. There we go. All right, starting with Ori. Closing the April 19s. That's interesting. I'm across all these positions, I'm basically flat. So like it's not actually that big a deal. Close position on Ori. All right, Ori with 30 calls. Let's see, 92's midpoint. Now, here's one interesting thing when you buy options, okay? When you buy options, you've got multiple things working for you. On a day like today, and this is why I like to keep a watch on the VIX, it actually helps you when the market moves like this in a small way. Because with the options pricing, there is one pricing option called a Vega. And Vega has to do with the volatility of a stock. And it is reflected in the extrinsic value. So while it's not a perfect one-for-one correlation here, with the VIX going up, the extrinsic value has gone up as well. So that's not such a bad thing. I mean, it definitely could be worse if it was all delta, but that does help us a little bit. Let me see if I can get out at 92. All right, closing Ori, April 30th. Oh, it just went to 90. I'll start at 92. Oh, I'm out. I'm filled out, closed at 92. Lock that down. All right, let me go over here. Go into the Discord. Where's it at? Here. No, here. All right, let's do Ori. Where is Ori? There it is. Reply. And then I need to be super lazy and copy this one. 4, closed Ori. That was the 30 calls. Close to Ori, 30 calls for 92 cents, which was, what do we get in? I think we got in at like $1. Yeah, we got in at $1. So total on this trade was -8%. And to my portfolio, that measured up a whole 0.71 basis points to me. Let's talk about why we got out. A, market sell-off. B, no, that's basically it. I was trying to see if it was below yesterday's low. Doesn't look like it is. Oh, it definitely isn't below yesterday's low or the day before. Like, remember, whenever you're moving your trading plan, you're moving your stop out point, don't move it down. Never, ever move it down. You're only moving it up, right? So that's why we're not adjusting this down here. And of course, I'm getting out because of the market sell-off here. So no big, flat on that one. Sebastian made more money than me. All right, let's go to RJF. I was pretty happy with RJF earlier today. I was seeing like, man, that one is really rocking and rolling, but it's what it is. Actually, real quick on RJF. Mahesh had sent me, this is really cool. Mahesh has sent me the records for the buy and sell signals. He sent me 65,000 records. And I was like, holy crap. He sent me every buy and sell signal from 2020 to now. And it's associated R. Oh, it didn't paste. Yeah, I'm copied it from Excel into a Google Sheet. He sent me 65,637 records, every buy and sell signal that they've come through for 2020 on every stock. So everything from 2020 forward for every stock. And I was like, whoa, this is sweet. I mean, look at this. Like every stock that they cover. So that was really cool. I haven't done much of anything with this yet, but I want to. When I was backtesting yesterday, didn't actually send that. When I was backtesting yesterday, what I came across over and over and over is that if it's under, here's a good, RJF is a good one actually. If it's under G15, to hold it until it reaches G15 as like an exit point on the behavioral heat map. Let's specifically specify that. This behavioral heat map down here, which measures fear and greed, right? So if it starts below G15 and gets to G15, that's a really solid exit point. Now, if it starts above G15, and this is what I saw here specifically on RJF, was that it doesn't always give 5 points higher, right? It doesn't actually go 5 points higher every single time, which was my initial criteria. But there are points where it stalls and reverses. So let's take a look here on this particular buy signal that came February 20th right here. Just 2 days later. So we're going to be looking up here in this area. I'll make this even bigger. We're going to be looking up here in this area at the heat map value. Start at G20, G21, G21 again. So it stalled, right? So it wasn't increasing in greed value. And so that can absolutely be an exit point. And like I say, it actually didn't get 5 points higher, but it would have got you out at 2 days into the trade versus 3 weeks in the trade, 14 trading days, basically 3 entire weeks. So to me, that's better because we could move on into a new trade at that point. So all that to say is for now, I've adjusted my trading plan to exit when it stalls or reverses on the G heat map rather than just arbitrarily going at 5 points. Because that was Jorn's question. Jorn's question was, why 5 points? Hey, Brian, why 5 points? Where are you getting that idea from? But I think he had a very valid point to question that. So that's why I've been doing a little bit of research. All right, now let's move on real quick. We need to get out of RJF. Here we go. Sorry. Close position. RJF closing the April 19th, 125s. Trying the order at 435. That's midpoint. Just went down. Hang on. Let's take a look real quick, right quick. On the 5-minute chart, what's it doing? Oh, it's going down. All right, let's try 425. Okay, I'm out. Fill price was 430. Oh, of course, now it's going up. Son of a gun. 430 was my fill price. So I'm out of RJF. 125 call. Right? Yeah, 125 calls at 430. Let's mark this real quick. All right, what was my outcome on that trade at 430? That's a 10% loss. And it impacted my portfolio whole 82 basis points. That's how you've got to position your trades, right? When it works, it's awesome, it's amazing. And when it doesn't, I will survive with a 99.2% account that it was before I put that trade on, right? That's what you've got to do. You've got to position size where these don't do anything to your account when they go against you. But when they work and you can just hold it, you can see 3, 4, 5, 10%, maybe even more on a single trade on your account. When it works, right? You let your winners run out of control. Cut your losers short so they don't hurt you. This is so important. All right, so we've got last vert, which is really hitting it hard, down 2.5% right now. Big time. Closing vert, VIRT. Where are we at? 20 calls. Closing the vert, 20 calls. Let me start at $1. See if we can get filled at $1. Not filled at $1. What's it doing on the 5-minute chart? I like to look at the 5-minute chart just to get a perspective of, hey, what's going on right now, right? Is it moving up or down right now? That can actually help with options pricing, as we've seen, right? It's building an order block here, and it seems to be moving down, so I'm not going to try and keep that any longer. So I'm going to move that down to 95. So started at $1, working at 95. I'm out. Oh, hang on. Fill price 96. So out of vert, fill price 96. That was the vert 20 calls, right? Yeah. And what did that do? The portfolio here got out at 96. That one actually was a bigger loss. I didn't like that. 26.42%. Had a portfolio impact of 2.13. But overall, like, I'm going to be okay. What is that total? Like 3.5%, 4% total loss across all those? It's okay. That's part of it. I hate to sound so flippant, but it's true. Right? We can't avoid these kind of days, but we can cut our losers as short as possible. Right? When I put my trades on, I had this conversation with Jorn the other day, which I really appreciate Jorn being available for that chat. So Jorn, thank you for that. We talked about position sizing, and he had a realization. And he's like, Chris, it took me a while to figure this out, but okay, we're going to do some math. Hope you like math. I love math. He said, it took me a while to figure out something. Let's do vert since we just closed out. We got in at vert at $1.30, $1.30. And let's say, for example, we bought this 26, okay? Now, here's my formula for position sizing. Your account balance, multiply the risk you want to take, times 2 times the ATR, gives you the number of shares. And then generally, I usually get in around the 80 delta, so I just default to an 80 delta. So in this case, in this example, it'd be 20 contracts. So here on vert, we've got our ATR, and we're doing the math to come out with an option size of 26. Okay, 26 contracts. Now, we put on the trade at $1.30. So this times 130 this times 130 is 3380. That's actually more than 5% risk, isn't it? This divided by 8% risk. Now I know what you're thinking, like, well, that doesn't make sense. How can you say you want to do 5% risk, but yet your position size is 8% of your portfolio in this case, right? In this example. Reason being is that the risk that I'm willing to take, right? The position size is 8% of the total account, right? And you can scale it to anything, right? It's still 8%. It's 8% of the total account, yet I'm only risking 5% in total. I only want to risk 5% or less. So if I say I want to risk 2% or less, I could put on a trade that's 3.5% of the account, right? Let's say I want to risk 10% or less. I could do a trade that's 17%. Because I'm not risking that much. I'm only risking the difference to get to that half ATR. So the half ATR value, let's say if it's right there, I'm not risking to a full ATR, 58 cents in this case. I only want to risk half of it. So you can actually put on a pretty large position. Maybe it's 17% of your account. Well, I would go back to 5. Maybe it's 8% of your total account balance. Yet your risk in the trade is only 5%. Let's do a different example. Let's do RJF. And we paid 480. 7.92%. In fact, let's do that for all three of these. And what was the other one? Bert. And I just need to adjust how much I paid for it. So RJF is 480. Vert or Ori is 100. Is that right? No. My bad. I didn't need to lock that down, did I? There we go. We paid 100 for that. And we paid 130 for Vert. Notice anything about these trades, right? They're roughly the same position size. Yet this one's $128. This is $30. This is $20. Roughly the same position size. Because it takes into account how big of an account you have. It takes into account what your percent you're willing to risk per trade. And it takes into account the ATR value. The ATR basically solves for how much volatility is in the trade. Here's a really good example, right? Vert has 47 cents of an ATR. So the average candle size, 47 cents. Where Ori has an average candle size of 42 cents. But Ori is 50% larger from 20 to 30. It's 50% larger of a stock. Yet the ATR value is the same, give or take, within 5 cents. So you would think that Vert would have a 50% higher ATR, average true range, but it doesn't. That means that this stock is significantly less volatile than this one. So that's why you can have a larger position size and number of contracts compared to this one, or a number of shares, whatever, and have approximately the same amount of risk. This is a really cool formula. I didn't come up with this. This is actually from the Turtle Traders. And Larry Height also mentioned this to me. So it's one of those really cool things where you can balance out your risk across all trades, and you can have a bigger position than 5% of your balance because you're not risking the entirety of that. You're risking a small portion of that. And like I say, our actual outcome in risk was to the account 0.71 basis points, or it was 71 basis points on Ori. It was Vert was 2.13%, and RJF was 84 basis points. That is how you structure position sizes to where even on a crap day like this, even on a day when everything goes sideways, I'm going to be fine. What's the total of these three come out to? 3.68%. I will be fine with 96.3% of my account left. And I'll be ready to go for the next one. So that's really important. I really want to stress this. Thank you for allowing me to do some math. Yorn saying thanks to Mahesh. Would you still be exiting positions if they are in shares, not an option? Oh yeah, it does not matter to me. I am indifferent, right? The word in this case would be fungible. I am completely fungible if it's options or if it's shares, because risk is risk, my friend, right? If I have 5,000 shares here versus 66 options, they are one and the same to me. Absolutely. Good question. All right, that's going to wrap it for today. Oh man, the market's selling off really. Oh my gosh. I was not ready for that candle. Holy moly. It's just like, get the hell out of the way kind of a move right here. These are prices we've not seen since 2 weeks ago. Yeah, the market was due for a pullback, due for this right here. And this is why, start with the market, let the market tell you which direction it's going. Real quick, I want you guys to take a screenshot of this. I stole it from Steve Burns. Let me find it. Here. Take a screenshot of this. We just broke through the 20-day. So a reversion to the mean after an extended trend, meaning, hey, you know what? We're pretty due for a pullback here. And we just broke that. Indicator of the short-term trend is the 10-day. So if it's below the 10-day, the short-term trend is actually moving down. And then if we break the 50-day, which is possible, I don't know how likely it is, but possible, a key support level in a long-term uptrend, right? If we break through the 50-day, watch out. We'll also be going short at that point. But in the meantime, we may have several of these like no man's land kind of days. We'll see. So that's going to wrap it today. No rate cuts expected. All right, so I listen to a lot of financial people. I'm a finance bro, as they like to say. And I also do a lot of consulting. And no rate cuts expected is interesting. I say it's interesting because my macroeconomic perspective right now is super bearish. You've got credit cards at all-time highs. You've got inflation that is not coming down. It may be less than it was a year ago, right? When it was 9%, now it's 3%, but that still means prices are going up. Prices are not coming down. You've got the housing market, which has completely come to a halt. Delinquencies in basically every category are off the charts. Delinquencies, this is such a key stat to me that nobody's talking about. Delinquencies across all asset categories. So we're talking about credit cards, mortgages, auto loans, you name it. Delinquency rates are at the same level, give or take, that they were in 2008, 2009. But we don't have any problems. The economy's strong. Yet at the worst that they got during the last time we had a financial crisis, we're already there. So no rate cuts would really, really surprise me. But we'll have to see. Yoran says, I'm totally with you on the macro, Chris. Dude, Yoran, I can't find anything other than the market going up. Other than the market going up to say the economy is great. But watch out for the shenanigans. It is an election year. We'll see how it goes. All right. Thank you all so much for coming. Don't forget, I will be live tomorrow morning. We'll be talking all kinds of different things on the live stream tomorrow morning. It's basically going to be a webinar. We're going to be going through lots of different stocks. Come invite your friends. There's literally no pressure. We are on the last, I think the deal expires Sunday night at midnight for people to get access to OVTLYR for the one-time lifetime price, and then that's over. So like this is my big push to say, if you haven't got OVTLYR, like you're about to be paying more money for what everybody else is paying less money for. And I'm super stoked to be a part of this. Oh, Mahesh also posted in the Discord some product related announcements. The multi-device login will be available on April 10th or 11th. So mid to late next week. So we'll be able to log in multiple devices. Oh, he also is going to be adding a field for 30-day average volume. I know that was something people had asked about. It's definitely one for me as well. And then video tutorials. Give me just a second here. I recorded a buttload of video tutorials, and they just went live on our YouTube channel a couple hours ago. Hang on. So these just went live on the YouTube channel a couple hours ago. So give those a shot if you need some assistance with how to use the platform. And then we're actually going to have these baked in to the platform where it's just like a one-click, what is this thing? And it's going to link to these videos. So these are going to be really good. Yeah, for sure you can. Absolutely you can. That's something with AppSumo. I don't know how to do that through AppSumo, but that's a really good idea. In fact, I think you should. Can we share an account within a family? Dude, like I imagine this is like Netflix. I'm not going to be tracking it down. But if you can swing it for your family, I don't see why not. I would do it. So, okay. Thank you all so much for coming today. I'll see you bright and early tomorrow morning. And you know what? Sometimes you win, sometimes you lose in this market. But of course, always, always, always be extremely defensive. That way you can live to fight another day. Talk soon.